Good morning, good afternoon, good evening. It's Tyler, the Chief Executive of Merlin Finance. Merlin Finance is an investor education platform for new and intermediate investors. Just search for Merlin Finance in your Apple App Store or Google Play Store. So today I want to talk about portfolio construction and management. I want to give you an idea of what's going through my mind as a portfolio manager and how I allocate capital or money to different assets depending on the objectives of the portfolio that I have in my control. So I want to go through, I think there's like 5 accounts that I need to make trades for. So I'm going to go through each of those accounts and explain what those accounts have in them and why I'm making the trading decisions that I am at the present moment in time. This is going to help you if you have your own portfolio of about a size of $1,500 or less. Some of these accounts that I'm going to show you and that I manage have more than $1,500 in their account, but there is one account in particular that I need to make tonight for tomorrow that is a fresh account that has $1,000 in it. So you'll see that one, and I'll point that one out when we get there. Okay, so what's on my to-do list as a money manager tomorrow morning when the market opens? Well, the first account that I'm going to look at is my son's account. This is Bronson's Trust. So right now, the total account value is $2,152.47, and I have $1,280 available to me to trade. So the first thing that you might notice is that my cash and cash investments account is $1,281.47, but I'm only going to account for trading for $1,280. This is to account for any trading commissions that might need to be done that Charles Schwab is going to take from me on a trade. So I always put I round down whatever that dollar amount is. So $1,281.47 becomes $2,881, and then I subtract $1 from there. So I have $1.47 as overhead for the trade when I do my calculation. Okay, so what do we have inside my son's trust account? So we have Coca-Cola. I always buy Coca-Cola for clients because it's just such a solid investment. Like you definitely want to have Coke. At least I think when you're first constructing a portfolio, because that's just going to be like your foundation, your rock. It's a great company. It's going to go up like over time. I really don't think you can go wrong with it. So he has 10 shares of Coke. He's up 20%. He also has Soxel, which I love. I've talked about TTT. I may have not talked a whole lot about that, but basically what that one is as treasury yields go up, like U.S. government bonds, when those yields go up, TTT goes up. And we know that treasury yields are going to go up because they have to. That's what the Federal Reserve is doing right now. So he has TTT. He also has DRV. So one thing I'm trying to do for all accounts is to have at least one DRV in there. So DRV is shorting the housing market. Just to be ready for that play, because this one can pop up to $167,000 in 2008 during the financial crisis. So you can turn that $35 into $100,000 if a crash of the magnitude of 2008 happens again. So I think that's like you're betting on 000. And roulette, if you can afford it, take it, because if you hit it, then you're going to hit it big on that one. So I always try and put at least one DRV in there. So after all that, Bronson has $1,280 left in his account for me to be able to trade. So what I want to buy 3 different equities for him. I want BDRY, which is ocean shipping lanes and the price of shipping container across the ocean. BRKY, which is a new fund. This one tracks the cost of breakfast foods as commodity prices within futures contracts. So I'm going to show you just a few things that BRKY has inside of it. So it tracks breakfast foods, so corn, coffee, lean hogs, sugar, Chicago wheat and orange juice futures. These are breakfast commodities, so they invest in monthly futures contracts. I think that the price of corn especially is going to go up in the near future because commodity prices have come like really far back down. So I'm investing in wheat because the price of wheat is basically where it was before Russia invaded Ukraine. But there is that supply chain disruption there. But also, if you look at the Farmer's Almanac for the upcoming year, so 2022 into 2023, we're supposed to have a pretty rough winter. I don't know if that's going to affect the wheat harvest or not, but I feel like that's a good place to bet that wheat is going to be in short supply in the near term, and the price of like corn because of like the weight, like how much it costs for fertilizer and things like that. I do believe that the price of corn is going to go up in the near future as well. So that's just the way to play the commodity space. So as you can see, this is like shipping goods and commodities, and this is like the production of commodities. So I think both of those things are going to be more expensive in the near term, so that the near to medium term, like six months to a year. So that's why I'm investing in them now. And then I have Berkshire B, which is Berkshire Hathaway stock. It's the cheap one because Berkshire A is like $44,000 a share or something like this. But if you want to invest in Warren Buffett, then you get Berkshire B. So that's another thing that I'm trying to do in all of the portfolios that I manage is I'm trying to get Berkshire Hathaway stock in there because this is a managed portfolio, but I don't really need to pay for it, and I don't need to do anything different. I just get all of Warren Buffett's work for free, so it makes sense to me. After all these trades, I'll still have $584 left. That's important because I think that the market is kind of irrational right now, and that it should pull back. So this will give my son a quarter the amount of his total portfolio is going to be in cash, waiting to catch some index positions like in TQQQ or TNA or any sort of like leveraged index fund like UPRO. That's what the rest of this money is going to go into when the market goes back down, if it goes back down. All right, so let's take a look at the second account. Okay, this is another client account. Obviously there's no names, but this account is titled KLA. In total, there is $1,600 available to trade. Like I said, this is a brand new account, so it doesn't have anything in it. So what am I going to do with a fresh account with $1,000 in it? Well, first things first, I'm going to buy some Coke. I always buy Coke right off the bat. Berkshire B, like I said, it's a managed account by Warren Buffett. I can get that for free just by buying BRK/B. It depends on like where you're looking up Berkshire Hathaway stock. If I'm going to trade it within Charles Schwab, then I call it BRK/B. If you want to look it up in Merlin, it's going to be BRK-B. Some other places have it as BRK.B. You just have to be aware that sometimes they call it something different depending on where you're looking. We already talked about DRV. I already have a video up about DRV. If you want to check that out, it's on my YouTube channel. Under I don't remember if it's a beginning or an intermediate trade, but it's kind of an intermediate trade. SOXL, you guys know about that one. That one's the semiconductor space. So in total, I'm getting just a great American company. I'm getting Warren Buffett. I'm getting a short on the housing market, and I'm getting in on the chips industry. After all of that, I will have $266 remaining, which is once again about a quarter of the portfolio is in cash, and I'm just waiting for the market to correct so that I can get some leveraged index positions for a really good price. All right, let's move on to the next account. All right, this last account is my Roth IRA. So this is where I do a lot of trading. This is like if this was in a business account, this would be considered my operating account. Like there's money in and out of this one all the time. So this one has $10,000 in it, and available to trade is $1,939. Really, I should say $1,938 because I want to round down and then round down again. So then this number would come down as well. Yeah, so I have almost $2,000 for that. So what are some, let's go into what I have in it, because like I said, this account is very different. Yeah, so right now I have some Bed Bath & Beyond. I have no long positions. I just have a call and a put option, interestingly, that expire on the same day. The call option is $12.50 and the put option is $12. So I'm really playing just both sides here. So you can see that the call option's up $27 and the put option is down $21. So if I were to just sell out of both of these positions, even though I played both sides, I would make $6. So I can elect to do that because that is a profitable trade, but I really want to push them and see how far they can go. So if the put option starts losing too much money too quickly and it's clear that I'm going to make money on that call option, I might just sell out of the put option just to stop the bleeding, let the call option run, and the amount of money that I make on the call option will more than account for the money that I lose in the put option. So that's a way that you can play both sides and make sure that you always win, because I'm not really sure what Bed Bath & Beyond is going to do. Stone. So Stone is a financial company, a software company that is based in Brazil. Don't ask me why. They're doing really good. I'm up 23% on this position, and I want to add more. I want to add more so that I have 100 shares in total of this stock, and then I can start to write calls or puts against that stock, because it'll be an entire lot. A lot is 100 shares, and when you have 100 shares, you can write contracts against your own stock to sell to other people for a premium. So I want to get another. I already traded profitably a call option in ST&E. I want to get another call option. I want to get 10 of those at the $20. It's $20 for one of them, so I want to get 10 of them for a total of $200. But then I also want some more long positions as well. So I want to get 75 shares at $13 a share for $9.75. What else do I have in here? I also have Matterport, which is my favorite stock, favorite company. I'm down pretty deep right now. I'm down almost $600, but I've got like $3,600 invested in this bad boy. Like, I have 500 shares of Matterport. I love Matterport. I think it's the wave of the future, so I don't mind. Ignore this one. TNA. So TNA is a 3X on the Russell 2000 index. I'm already up 36% on that one. I expect these to trend back down. So when it does, I want to buy more, not only for this account, but also for client accounts. That's what the money left over is for. UPRO, once again, I got it at a good price, 26% up on that one. TQQQ, got that one at another good price, 28.4. I basically had bought a lot of these positions when the market bottomed out in June. SOXL, one of my favorites. I have one call option in here, which expires in 2 years, and then I have 25 long shares. LabVIEW, once again, call options on the healthcare space. So wheat, that goes along with the breakfast, BRKY. And I have 100 shares, so I can write options against it. I definitely want to get more exposure to the commodity space with BRKY, and I'll go into that in a second. BDRY, I'm definitely gonna reinforce this position because I think that this is really undervalued right now, and this is gonna go up for shipping container costs. And then BRV, I have 10 shares of that, because if I turn, if a single share can go from $35 to $100,000, then I'm sitting on $1 million for this position if everything goes how it used to, which it might not, but you never know. So 2000, cool. So like I said, what do I want? I want more ST&E. I want some call options because I want to be able to sell those for a higher premium than what I bought them for, obviously. That stock has momentum and I like it. ST&E, I'm going to get some more 75 shares at $13. BDRY, I'm getting that one because I want to average down in my BDRY position. And BRKY, I want to get 20 shares of that at $23 because I think that the price of commodities are going to go up in the very near future. So I want to make I want to position myself early for that to be able to ride the commodity prices back up. So that'll give me $113 remaining in this account. That's a lot lower than all the rest of them. If I was to have 10% sitting as dry powder in this account, that would be $1,000. But I really don't want that. I only have about 1% because you see all these call options that I have. I'm going to be selling those as for money to buy more stuff. So that's what I'm saying. This is like my most active account. I'm in and out of trades in here. And I try and make a profit in here so that it's at a tax advantage. And yeah, I just do all my hustling here. Like Bed Bath & Beyond, dude, that's a hustle. Like absolutely. Like I don't like that company. I don't like that stock. But I do like making money. That's why I'm doing it. So yeah, that's a day in the life. That's what I'm thinking about. That's what I'm doing. That's where I'm putting my money. And that is how you construct a portfolio and you manage it. You try and worry about your entry positions and things that you like. You just buy more of it when it's down if you really, really, truly believe it's going to go back up. But you also want to have a diversity of different things in your portfolio. Like you don't want to have all software stocks. You don't want to have all beverage stocks. You don't want to have all meme stocks. You want a good mix of all of those because that's diversification. Okay? All right, cool. I hope you got something out of that, and I hope that these trades work out for me tomorrow. Who knows?